We are now officially live for another edition of Sunday Market Outlook. It is Sunday, March 17th, 2024. And without further ado, we're going to go ahead and dive into things here. Brent, I don't know if you want to go ahead and kick us off with the fundamentals. We kind of already know the vibe. So take it away, bro.
You know it, you know it. Let's get right to it. So, obviously, we know what we got going on. We got news, we got big things, obviously, on the China side of things. We got to keep that in mind. Nothing that should affect us directly. But tomorrow, right away, we have some stuff on the housing. Nothing super important, really, on gold. That's really what we trade here: gold, NAS, US 30. Those are the main three pairs that Rich and I trade, and a lot of others, other educators as well. So if you are trading any other pair that you see here, then yes, obviously keep in mind on that. But we're going to really go more of things that could move for gold and for NAS more than anything there. So really chill tomorrow morning, really good. Nothing much happening at that point, so we'll be fine. Run into Tuesday. Again, pretty calm week. Yes, we do have building permits. We do have housing starts. So really right now we're still in that second quarter of the year in the housing market. There's a lot of just things happening right now as far as if the interest rate's coming down or not coming down, a lot of political things being said or not said, of things that could happen, could not happen. So that's why I think this one's really could be as far as important. It's just to really know what happens for the future. Nothing that'll really move the market at that point. So Tuesday we should be perfectly fine as well. Nothing really to worry about there. Wednesday, as we start going into the action here. So Wednesday, now we're definitely having some fun. Wednesday, we're going into federal fund rates. So this isn't the expectation, and typically expectation moves. This is the actual federal fund rates. This is one where we really dive into as far as what's happening in the market there as far as interest rates, something that I've said before. And a lot of different educators trade a lot of different things, right? And I've said this publicly, and I always say it, right? DXY, I don't look at the DXY when I trade. And I know a lot of educators do, and I don't say there's nothing wrong when I say this. It's just me, how I look at the market is, for me, what matters the most is this right here. Because interest rates really ends up having to move everything else, stocks, this, the whole nine, really, as far as what the future is, what's going to happen with economy wise, is the interest rate. So this is one of like the most important things that I look for the month, not just for the move that's happening at this time for us to catch the picks that we could catch, but really to know kind of where things are going to be headed for the rest of the couple of weeks, right? So this one's super important happening at one. We have obviously FOMC economic projections, FOMC statement. These fall in line based off what the interest rate is set. So it's really one big set of news, but should see at least one big spike. And this typically happens at the moment at the dot. So we should see one big spike, either up or downward. We'll know once we're there, once it actually happens. We'll obviously look at it before, project it, go for it, have fun, but we'll really know once that move done. And then throughout that hour, we'll have basically the statement, the projection, things like that, which will give more. And then we have the press conference at 1:30 speaking about the same. So that's why I say it's pretty much one big news that's really going to be said at that time. Super important. And because of this, we might be seeing some random spikes here and there, maybe the day or two before. So tread cautiously, as we always do. Obviously, we have our proper risk, we have a proper trading plan, the whole nine. But if you see a random little spike happen a day or two before, you're like, wait, why is this even happening? Or even here in the morning, if we're seeing Wednesday in the morning, the markets start being very volatile, be very indecisive, things of that nature, or just completely dying out and not moving, this is your reason why, because it's just waiting for that moment, either waiting to get to one spot to then do what it needs to do, or just chilling there, just waiting for it to be like, all right, we're off. Like I've always said with news, don't get lost as far as what's being said. What I mean by that, they could state and say, hey, interest rates are going down. You're like, oh, okay, cool, awesome. So gold should go up. And gold takes. Like, it's, don't get lost on what's being said in there. Obviously, it's good to know what's happening just for day-to-day life situations and maybe other investments that you may have. But this is just important to know the type of news, to know how we are going to trade it, if we are going to trade it, or if we're just going to sit on our hands and kind of wait at that point. But this is one that moves aggressive. I'm excited for it. I'm loving this one. We're going to be in Vegas on this one, so hopefully it's a little moment where I could step aside and pull the phone out and kind of give you guys an update of what I'm looking for. But we're going to be actually in the Vegas event for this one, but still happy to see what's happening at that time. That'll be what, like, if it's one for us, that's like 11 over there. So yeah, we'll definitely pay attention on that one. Thursday, big red day again for the market as well as world side of things. For us, really here, the thing that we're looking at more than anything is unemployment claims. Yes, PMI likes to move, but this is the flash PMI. So definitely gonna move, but it's not something that we're looking like the unemployment claims. Unemployment claims is definitely one. Gold likes to move at 7:30 Central as is. And then we're adding on top of that unemployment claim. So another big day. And then from there we have pretty much good news all throughout the day. Existing homes, lead, gas, FOMC. So we have a lot of different sets of news still going all throughout. But the morning one for me, most importantly for Thursday, is going to be unemployment claims more than anything for that one. Again, flash PMI is there. I understand it. We're going to be careful with it, but this is the real one that I'm looking for. Is that flash PMI is a little bit crazy too because it's happening 50 minutes right after the opening bell. So Thursday is one that you really kind of be confident of what you're doing. Really stick to your plan. Don't let emotions get to you because we're going to have a move happen regardless at 7:30, and then we're adding unemployment claim to it. Then we have an hour later opening bell. And then we have 15 minutes flash PMI. So don't get caught if you try to lose one and you're trying to get the other one and back and forth and start breaking your own plans and get emotional. Thursday is not the day to get emotional because it'll be a ping pong situation where you'll get slapped left and right if you do not know what you're doing or you don't know how to control yourself. So it could be a day you could be very profitable of it, take a lot of advantage of this back and forth. I expect Thursday to be one of those days where we get a really big high, then that immediately comes down for that low, then back and high. You guys have seen that in the market, right? Where you see the charts where you have three huge candles right next to each other, kind of doing that big up and down. Thursday could be easily that day. And you don't want to get selling when it goes up and then you're buying and then you're buying and then you yeah, it could be really nasty at that point. But then again, it could be a really good day. That's what I kind of see for Thursday. Of course, not a financial advisor here, me, Rich, or I. We're just obviously talking about what could happen, but based on what I've seen the market do when it has these type of days. And then the reason to that is because we close out the week with our buddy Powell speaking. Now, you guys know, buddy Powell's my best friend. Love him to death. So, but here we have him speaking on a Friday. So it's one of those things where it's a little bit, if you guys work 9 to 5s, you never like speaking to the boss or anything like that on a Friday, right? So it could be one of those same situations. Like you do not want to have Powell speak on a Friday. It's kind of never been a really good thing. I've not had really good experiences before when our buddy speaks on a Friday, especially after everything. It's kind of typically we see him speak in the middle, like on a Wednesday, in between the PMI and between a CPI, but we're just going to get interest rates, this, that. We're all anything leading towards recession, where things are going, bonds, everything really 4Q, 3Q, 4. We're going into politics. And then at the end of the week, he'll be like, oh, hey, how's everybody doing? Yeah. So all that was said, and he'll just either enforce basically everything that was stated, say nothing, or kind of try to level things out in the market. But it's on a Friday, and Friday's correction Fridays anyway. So me personally, I think this will be one of the first times where I'm not going to trade with Powell just on a Friday because what everything else happened before. Really, if we do the right thing here Wednesday and Thursday, you could chill for the rest of the month. Like there's that much volume that's going to happen in between those 2 days. That if you follow through with your plan, like this could be very good for us, or it could be very situations where it's like, man, my day got cut off with like I hit what I needed to hit. I'm done for the day now, and it's barely 7:30. Oh well, come back tomorrow. So follow your trading plan, guys. Get exciting. We're going to be in Vegas, so I'm probably not going to run most of my session, or at least two of those sessions of those days, but I'm going to definitely be on the chats. I'm going to be sending different stuff, communicating all this stuff to make sure that you guys still have what I'm looking at as far as still communicating with everybody there. But yeah, it's going to be an exciting week. Outside of that, I'll pass it over to you, Rich. You could show the charts and see what we're looking at.
All right, awesome. So yeah, definitely some very insightful info right there for the week. So guys, I mean, it's really just been a heavy fundamental based markets this last basically month. That's something typical that we'll see at the beginning of a year, especially with elections and everything. I mean, expect this year to be a very volatile year, which is good, guys. It's good. We need that in order to have our trade setups really move, right? So just a matter of being disciplined and understanding when to pull the trigger. So Brent definitely has prepared us for the expectations of the week, 100%. So appreciate you for that, man. As far as the charts, we're gonna go ahead and share screen here really quickly, and let's look at gold first. Let me delete all this real quick here. So gold, okay. Right now, let me turn this off real quick. There was this one zone. I know that Maddie had called sales office, I believe, earlier in the week. I talked about this on my sessions. Essentially, I always like to start at a higher time frame, guys, when you know how I do things, right? Top down analysis. For as gold, we saw that once we reached all-time high, previous all-time high at 2150, we were saying, hey, look, either we're going to reject it once again and then really start working our way back down to kind of balance out this massive influx of buyers here. But because we broke and closed on this day above the previous all-time high, that's why we weren't just ready yet. I know a lot of educators, I mean, even including myself, really had a bearish bias, not based off of current price action, but expectations of what gold should be doing. And we did take some losses on the selling side of things. I think it was maybe the week before that. But as far as where we're at right now, we've already started to see a willingness for gold to slow down. We've kind of peaked out over here. We have, for the most part, respected the bullish structure. But now that we've had our push up and failed to make a new high, okay? So we talked about fundamentals. Now we're talking about technicals. If we make a high in the market, we make a retracement, we're expected to make a new high if trend is going to continue. We have yet to see that, right? We have now made basically a lower low, but we have not broken this low right here. Or I'm sorry, a lower high. So we have this high, we made a retracement, we formed a lower high, we have not made a higher high. And now price is still kind of pushing to the downside. So that starts to tell me that gold at minimum has slowed down on the higher time frames like the daily and the 4 hour. So we're basically kind of in a wedge here, is what you would call it. So from a technical standpoint, there's really two scenarios that I would say. And you know, I don't trade support, resistance, trend lines, or anything like that. But to give you a clear visual, this is what I mean by being in like a squeeze right here, right? So essentially, two things are going to happen for the most part. We're either going to kind of start to break higher and start targeting new highs because we're just not ready to sell off quite yet. This could be a enticement in the market to say, hey, you know, we are starting to push lower and lower. You know, I like to look out for the fake out. So I would not surprise me if price does break and close higher above these sets of highs, that could set us up for a new all-time high once again. This is one scenario. The other scenario is that we do go with what seems to be the obvious trade, and that's typically not something I'm comfortable with if it's too obvious. But, you know, there are the obvious plays that do work out where we start breaking below the previous all-time high of 2150 and we start using that as sort of a resistance level to start working our way back down into what I believe should be a at least 2080 to 2060 you know, destination for price if we are to come back. And the reason why is because, again, you can see that's where the volume really came in from this huge rally to the upside. So I feel at some point, if we are going to be bearish, it's going to come back and rebalance pricing at this point. I've been saying that for quite a while, but again, we are looking at it from a macro perspective, and that macro perspective is not really going to change until we achieve that objective, or if we get clear evidence that we are really not moving that way, which right now, again, we're kind of in the middle because once we make an all-time high push, there's got to be a retracement, right? I mean, we made this low, we kind of worked our way up. Now we have this impulse, we're slowing down. So either we're going to start making that correction or we're a bit premature on it, where we've had the push, we're having a slight pullback to test the previous all-time high, and then we'll get confirmation of that with breaks of structure. So two scenarios. I don't like to box myself into one hard bias, right? I like to create scenarios for myself to be able to take advantage of either or, and we allow price to give us the reality, right? Price is always right. Always remember that. Don't try to be right. Price is always right. We just simply adapt to what the chart is telling us. So again, right now, yes, bearish structure for the most part because we're failing to make new highs and we're still showing some order flow to the downside, unless, again, we get a clear break of this, which will lead to maybe a new high. All right. So that's really as simple as it gets for gold. Again, you know, Brent and a lot of the education team, we really are intraday traders, but I like to start off with a macro perspectives because if we get the macro right, then we can position our entries on the smaller time frames to be in alignment with that and catch the bigger trend. And that's really the goal. So obviously the range we're working in right now is basically this whole box, right? So depending, I don't want to take any trades within here personally. I want to see price either start to really make heads above here and we have clear targets, or again, we start to kind of break free out of this consolidation and then we can start looking at some nice shorting ideas. All right. So that's really what I got for gold mainly. As far as NASDAQ, we have had what I've been talking about here, which is the shift from what I believe to be, this markup phase where we've kind of just been pushing bullish, bullish, bullish. And I'm talking macro right now, okay? To where we are now forming what I believe is a distribution formation here. If you guys don't know what I'm talking about, you can look up Wyckoff schematics. This is something that it's not like a strategy or something that I do all the time, but I am aware of the different phases the market can head into. The easiest diagram I kind of like to always reference is this one right here, where typically the market will have some phases where price has kind of bottomed out somewhere. We wait for manipulation to the downside, and then we start our shift and rally to a new uptrend. Then we actually just ride the wave of the uptrend until we finally run out of gas, you can say, and we start going sideways until we fake to the upside, and then we start shifting lower, and then we have our downtrend. Again, this is not something that you can say is a guarantee of the market will do, but it's a logic that has served me well to kind of understand from a macro perspective, what is the market kind of leaning to do. So for me with NASDAQ, again, we've been pushing bullish, and I think overall we are bullish. However, if we look at just highs and lows, right? We mark here, here, and here. So at this point, we're not breaking any structure, and that's why we end up pushing this little high. However, I want you to notice something. When structure is working really nicely, it's because we have a push, a retracement, a push, a retracement, a push. Sometimes this last little push, it really depends how aggressive and how strong it breaks above the high for me to feel confident about continuing it. And in this case, with NAS, we see here that we just get a nice wick. And then we have this drop. And so for me, when I see that, all right, I don't like to really consider that a true break of structure because it didn't really close. You can see the candle closure did not happen. All we did was get a wick above the previous high. So if you guys are still going through your basics, if you haven't really fully understood the anatomy of candlesticks, that is definitely something that you gotta start with. And I know Brent in Vegas is gonna be covering that. So that's going to be awesome if you're there. And that's why it's so valuable, guys, to get to events, to get to as many training sessions as possible, because something as simple as the anatomy of candles can really make a big difference in your understanding of structure and making better decisions with whether you should be buying or selling. So long story short, guys, we basically took out this high, and from there, I started shifting my bias to bearish. We see that we made a new lower high, and that did prove because we started breaking structure lower. Which for me, that starts to prove the point that I feel like we are currently in this distribution phase that we can see right here, which means that I'm expecting price to continue to really overall respect this general range from a macro perspective to work our way down at minimum until these price points right here. And that's where we'll kind of jump to smaller time frames real quick and kind of wrap up with NAS. But essentially, this is a nice imbalance that was left behind on NASDAQ right here. It's really the beginning of this really strong push. So you can see, again, the market will look for areas to manipulate to the downside. And then we start breaking to the upside. And then we kind of sat around in here. But this area was never revisited. So that's a hot spot for me to see price this week kind of come into these lower price points of 17,500, 17,500, well, anywhere from 17,500 to 17,600 is where I expect NAS to overall go and kind of respect that distribution formation. So really, it just depends, tomorrow during New York session, how we kind of start to respect, these areas of supply. Again, you can see price kind of made the supply zone push lower, respected, and we've kind of been respecting all the supply zones here. So for the most part, the last pullback really was from here to here. So this is the range that we're currently working on with NAS. And so obviously we're going to want to see this high get respected and some type of retracement until we start pushing to here. All right. Something that will be a confluence for me, which you guys have kind of been seeing me tease a little bit, and I'm going to be covering in Vegas, is how we're looking at breakouts of certain ranges and how I use that to basically really pull the trigger on whatever trade idea I might feel for NASDAQ specifically. right? So right now we're forming that current range because of the time that we're trading in, right? So I'm not trading during Asian range or during these late Sundays. I'm letting this range fully form. And depending on what the range does is where I will have either a bullish or bearish bias for the next trading day. So my hope is that we kind of range in here. And I would expect that overall we'll be respecting these highs. And so if we can get a push into it and then a break below the low, that will really confirm my trade somewhere like that. So I know it's kind of a mouthful and a little bit to keep up with. Again, if you're a little bit newer, that's why I recommend if you're not in a Koshex, get in a Koshex. If you are in a Koshex, make sure you're tapped into my sessions, Brent's sessions, Matthew. I can really list all the educators. They're all great. You got to find something that resonates with you, and you got to get more info and more mentorship. That's really the key. But that's what I got right now for NAS overall, just kind of respecting these points of supply and working our way down into that 17,600. That's my expectation, and we'll see how it kind of plays out during New York and with all the news. So that's really it on my part. I don't know if Brent, you want to share your charts, kind of give your input as well. I know that you dominate NAS, especially on the smaller time frame. So
Yeah, no, and I love because it's one of those things. Like I said, I love scalping. Scalping is my thing, but that's the whole purpose of Sunday, and you really need to have that vision as far as where you're going. I always say that, and I joke around in the sessions, right? Like I could care less what's happening. I just need to know what's happening in this 5 minutes, and that's it. I'm in and out. That's what we do. Like that's the scalping side of things, but it's important to see the bigger picture. And yeah, like 100% on when you're looking on the schematic side, and here to me, it's that thing, right? I think we're coming up a little bit higher, like you're saying to then just continue down, it makes perfect sense to come up for here. And really, it's that point. If we see like a break and just support over that 18,300, then it's going to keep on going.
yeah,
Another big factor to me is why is last week we had that drop, and that's why it's always important to really kind of think outside of that box, take that extra little step, take it serious. If you really want to do this, take it serious, right? Like NAS 100 is 100 stocks. And a lot of those companies that are in those stocks last week had massive layoffs, like 100, 300 people in one day, like gone. So obviously, as an investor, and if you're putting money into that, you're not going to want to keep on putting more into that, and that could move overall. And we had a handful of companies in the NAS 100, in the US 30, just no reason at all. Just hey, happy Monday, guys, you're gone. So that has sometimes a little bit of a shift too, which again, the market is going to go where it needs to go. We just have excuses sometimes of getting there faster. So we have those massive layouts, we have the news, we have all that. So we just need to make sure we chart in. It's always important. I know a lot of times we're asked that, like, well, of course it's going up or down. Well, yeah, we know it's going up or down, but that's why we prep to say, okay, if it's coming down, this is where we want to go. If it's coming up, this is where we want to go. We want to be ready for whatever action is going to happen. So I love the analysis is on point for sure, bro. On the NAS, same thing. We're in that schematic. I feel it might just be one of those kind of fake out situations, like this little last little drop, kind of indicating, hey, we're done with the schematic, and be like, nah, psych, and then be like, okay, now we're done.
yeah,
Now let's go and be done with it. Just this big candle here just doesn't leave me at ease to think we're gonna just keep on going. So that's why I would like to see this come up at least to this one level, take care of this little guy here, then go ahead and drop. That's what I would love there. And then for gold, same situation, right? Gold needs to come down for all this bull rally that we had, multiples called, and hey, it is what it is recorded, right? Multiple set sales, and it just be like, yeah, sure, let's go. No, nah, not yet. Yeah, sure, no, not yet. Finally, until it decided to do what it needs to do. And same situation for me. If it remains underneath this 2170 pretty much. It remains underneath, keeps on. I actually got tempted and I got into a buy. It kept on touching this 54 area, and I was like, bro, I need to just go in. But I'm really just going in to I think it was like 59 or something like that. So it's not even farther, right? But I needed to stay below this EMA, stay below this movement that we had here. Like stay below this,
yeah,
we're off. If
yeah,
it breaks and it starts testing off of this zone and supporting off here, then it'll keep on going. And for me, for gold this week, like I said, with news, and this is just pure, call it whatever you want, conspiracy, whatever you want to call it, right? I feel with news, it's going to be one of those things too, where it's like, screw the dollar, screw the dollar, screw the dollar, screw the dollar, with all the news that we're going to have, and that really kind of could push up gold to keep on going up And then we'll have Powell come in and be like, hey guys, don't worry about it. I got a plan. We're going to drop interest rates. Don't worry about it. I'll catch you next time. And then that'll help kind of just clear out everything. I feel it's going, it just, I have that feeling that this week is going to be one of those very institutional, very stop huntish type of week at that point, with all the news that it's set based off where we are. We had this conversation since, what was it, last week? Like, there is no reason why gold should be up in this area right now. It is March. Historically, if you go back like to the months and break it all down and go to the years and everything, gold goes by quarters, goes by seasons. It remains always in that same level every single quarter, all throughout the years. Where we're at right now is where we should have been in December, which December never even reached this high that it should have reached. So it's a very weird situation to where, and I think because of that, I think gold should really drop more than anything after this whole entire week. Again, use all this news as an excuse just to really push down gold where it needs to be at historically for the month that it is. Can it go up based off the news, based on everything that's happening in the world? Sure. Like, yeah, unfortunately for the US dollar, yeah. But overall, chart speaking, looking at gold for so many years, in the sense of just staring at this chart alone, again, I'm not at ease with gold being where it's at right now in March. We were in December, I'd be happy as ever right now. But from where we are right now in March, it shouldn't be here. So hopefully with all the level of news that we have, it's giving enough force to really bring us down. I mean down. Like it should really bring us down into that 1900 high 1800s. Like really needs to bring us all the way down here for us to enjoy gold for the rest of the quarter and kind of go back into that normal flow that we have. But on point with book analysis as always, bro. Always happy to have that educator confluence with you, of course. We both see the same thing, even though we trade so differently, we see the same thing. So yeah, it's all good. Let's have a week for sure.